Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? How we doing in YouTube? You guys got me okay in there? Screen and audio? Okay, great. Well, good morning, everybody. Thanks for visiting Trader Lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. The Trader Lab is a community of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading, but it is a advanced methodology and process. It is based on helping traders understand the actual business of trading, developing plans to operate in an environment that is 100% random 100% of the time, but only interacting with the other participants when there is a statistical edge. It is really gaming theory. Typical retail trader behavior is indicators and time frames looking for certainty and confirmation. It's all psychological. Don't worry about it. But the business of trading is gaming, and we need to conquer, if you will, our own psychology, our fight and flight and fear. And fear is wiring. We are fearful because we're wired to avoid risk. Yet in our business, we have to develop detachment and also accept risk. So there is no confirmation and there is no certainty. So we're constantly pushing against our primal wiring. And I believe anyone who comes to Trader Lab, does the work, and reverse engineers the structured trades I share, can learn how to trade. But to actually overcome the psychological impediments to actually being able to execute a plan is a whole different topic and will be almost everyone's biggest obstacle. Actually doing what's in your best interest, not what is in the best interest of your primal wiring to avoid risk and look for certainty. I hope that makes sense. I've got a lot to cover today, not only today's trades and today's structure, but also I've got some important announcements for you. So please tune in. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and paper. I'm going to give you a couple brief statistics, a overview of something called context, and some surprises. How about that? A surprise. What is that surprise? Well, first of all, let's try to do this in an organized fashion. If you're interested in what's going on in the structured trades, there's 60 PDFs that are available for you to download. These are broad strokes of structured trades. It's not plug and play. This is not a business of being mechanical. If it worked, we all do it. And if you're trying to fix a process that is mechanical and thinking every time something happens that somehow it's going to work, I think you're going to find it doesn't. And again, maybe, that works for you. I hope it does. But most of us who have gone down that route, it's about alignment and then the specific trades that actually are qualified, not plug and play. And if you're waking up doing the same process, trying to fix something, because we all have winning trades, even if we just used a random buy-sell generator, that has to tell you something about operating in a random environment with random inputs that might not have a statistical edge. That's the whole gaming process. We need an edge, not something that works sometimes, because it could be a guaranteed loser over time, even though intermittently you have winning trades. And the fallacy of having winning trades is you may still be a loser because there's no edge. I hope that makes sense. Now, here's something interesting. And if you're interested in this, you're going to need to get verified to access all the additional education. This is brand new. It's a course on supply and demand setups. It's something you definitely want to take advantage of, and there's a lot of additional education. It's all available at no cost, not only in the Trader Lab, but in the Bookmap ecosystem. Now, how do you access all of these opportunities to improve your understanding of market mechanics and potentially vetting setups? You need to get verified. You can use the QR code. Now, what does this mean? If you're a Bookmap subscriber, all you need to do is get verified. And if you are verified already, you don't need to do anything. But if you're a Bookmap subscriber and you want to have continuing access to all the additional education, stocks, options, crypto, order flow, and the rest of it, including the Trader Lab, you need to get verified. So that is the email that's associated with your license key. And also, if you are a TOS user of Bookmap, you also would need to register, and that's free. And if you are not a subscriber or TOS user, you can still visit and participate in all the additional education, including Trader Lab, if you register. But it's our attempt to clean up the Discord server and reduce the spam, the phishing, and the nonsense. And you guys all can relate to that. We all know what that's like. So Bookmap wants all of the participants in their ecosystem to have the best experience possible. So if you want to take advantage of the supply demand, you need to get verified. Also, Bookmap has contests for free subscriptions and all that additional education. Anyway, want to get that done. I hope you find this useful, and let's go a little further. Please give a like if you're visiting in YouTube. Now, this is the higher time frame. I like to, start at the top. This is called the top-down, bottom-up approach. Now, this is the higher time frame. Let's look at what we're looking at here. This over here is the retail price, and it's from way out here someplace. When I say out there, I mean maybe April or something, and I don't remember. But this was too high, and this is where we broke away and did this down here, and this was our target on the day that we came down here. Remember, shorts. Then we found our buyers, and then higher, and then we get the huge gap. Now here you have buy stops here, buy stops here. This day we only touched these stops. Now, what's interesting about this, and this was a day where it was long as in the morning. This is day before yesterday, and then shorts after we failed with this. So that set up for me, my primary idea for yesterday was to take this low out and come down and fill the gap. Well, market had a different plan. And as you guys know, I was in mean reversion trading yesterday, and I didn't get involved in the long side. I actually was trading the short side, which in hindsight was okay, except I was working real hard when really the trade was the long side. So I sat back last night like any trader would, and I had to think about why I didn't turn around. So I thought about it. Next time, I will turn around. But I still did okay because I was following a vetted plan that was mean reversion. I actually should have been on the long, but that's not important. Still worked out, which is always interesting. So you can trade from either side, but the good side yesterday obviously was the long side. Now here's what's important. This is resistance up here, this 33.75. This is the 90-day pause day. All above this and here are buy stops. So yesterday, once we came up, we were looking to take the stops out here and to take the stops out here, test this level. Now, there's a gap between here and there. And now I'm going to get into Bookmap right after this. Actually, I'm going to get into a couple other little pieces. So the idea is that we could fill the gap and come here because this was the last retail price. So if I get above this intermediate time frame high volume, I can fill the gap and come here. If I can't, and all I did was squeeze out, and I may still test this, then I can revert back and maybe come all the way under here. Sell stops are here and here, and then fill this gap. So I got a gap here, and I got a gap there. I got resistance there, and I also might only come up in here and find my sellers. So that's what I know. I'm sticking to it, and I don't know anything else. It's not my job. Now, if you remember yesterday, I was working the short side when the trade should have been the long side, okay? And the longs actually set up out here, but I was working a couple levels. I was working shorts from here back to here, and then I had this level for also shorts. And once I got through this, then there were no more shorts for me, 85% probability of taking this out. And we got a similar situation today, except today sets up a bit differently. Let me see if I got one more thing to show you. Okay, this is the naked volume point of control. What is that? It's a profile term, and what it represents is, think of this, the trading is shopping. You know, it's like what's too low, what's too high, and the market's continually rotating and auctioning. If is this too low? Well, is that too high? And then we spend some time. And that becomes the high volume is the retail price. If I leave it, it's saying is, that price is too low. Now let's go up here. What do we think of this? And what do we think of this? What do we think of this? And that's, you know, that's the auction. So, you know, if this little high volume becomes too high, then we can step back here. If this is too high, we can come back here. If this is too low, we won't. The highest retail price for the day is here. So here's what it tells me in the auction world. 85 is an outside edge. The buyers were down here. The sellers were up here about 05-ish or so. And the fair price is here, 97. Remember that. Now, there's more. This is all before the market opens, guys, and I hope this isn't overwhelming to you. But now, actually, I'm going to skip this one. This was it's a trade, but I want to move further along, okay? Let's see. So, let's come back. The naked volume point of control, 97 is the fair price, okay? Settlement is here. And I'm going to give you some statistics. Yesterday's value area high is there. Potential target, 85% or 82% probability to get there. Potential target, that's the overnight volume point of control, or the fair price. About an 85% probability to take this thing out, yesterday's high, and it doesn't have to do it. There's more. ETH low, there. About a 90% probability to take out either the ETH high or low. First hour's low, about a 90% probability to take out the first hour's high or low. Where's that low volume area on the outside edge of the distribution? It's right there. Now, why am I spending time on this? You're probably saying, get to the good stuff. Guess what? You don't have this. Why? That's that low volume node. What does it tell me? The language of the market. I don't use any indicators. So what do? I followed the auction because this is where the participants said, if this is your can of tuna and it's $1 retail and it's on sale at 60 cents, and it's perceived that that's the fair price, highest volume. Think of your store, and it goes on sale, and nobody knows where the sale price will go. Part of the thrill of randomness. You put 5 in the cart if it was 60 cents or 50 cents a can, and then the sale is over, we can come back to retail. So today, I got that on my chart. That's what's important. Now, let me give you some statistics, and let's get into this thing. We are opening, and there's schematics for this to help you organize. All this is done before the market opens. What's my plan for the day? And based on the current condition of the market, and there's more. The first half hour It's called the IB30, the first 30 minutes. If I take whichever side I come out in the first 30 minutes, suggests a high probability of taking the first hour's low out. So if this comes out, then take it out. That's all in the statistics, and these are available on TraderLab. But let me tell you now the core concept. We're opening in range, so between yesterday's high and low, and we're opening in something called value. Value is yesterday's value area high and value area low. In the TraderLab, we have documentation that's available to all of you, and this is what it says. Are we opening in range in value? It's conditional statements. Trading is conditional. What are the conditions of the market? Qualifies the trades that you have vetted that fit and are in the condition. And like everything in trading, the rotations are random. But if we can identify the condition, we can then eliminate certain trades because they're not qualified statistically and look to deploy the trades that fit the condition. Does that make sense? How are we doing in YouTube? Does this make sense? And please give a like if you like the idea of understanding how to prepare to trade. Now, market opens in balance, in range, in value. What does it mean? Follow me very closely. The market is in balance. What is balance? Likely a neutral or low conviction day. That means two-sided trade, okay? Are we breaking out of yesterday's value area? So far, this is the value area high. No. We are trading rotations. If I come out here, opening in value, wait, there's a little more. Are we breaking out of the prior day's value area? Yes or no? Currently, it's no. So what does it mean? The market is in balance. What does it mean? We can superimpose the prior day's range and we can add 10% to each side to estimate the range. Are you aware of this? And it's not a prediction. How do we trade this? We trade the value area extremes. Where's that? Here and here. So it's outside in trading, and nobody knows where the outside is. What does it also say? Market sentiment has not changed. And why? The market opened in value, suggesting sentiment has not changed. And until it does, we expect two-sided trading and reversion to the mean. And what is mean reversion? Outside in trading. This is all before the market opens. Are you guys tracking? Is this approach, if you had a checklist of pre-flight and you went down a list of elements that you need to quantify to qualify the trades that might work in this environment, does that give you a statistical edge over other traders that just come in and make it up? What do you think? Does this help you create edge? That's why in the TraderLab, as a developing trader, you would put this first. First is, what are my trades? You got to qualify them. You got to reverse engineer them. You got to vet them. You got to know you have an edge. But you will not have an edge with those trades in certain conditions. You have no edge. They're not qualified. Or are you just doing plug and play? You're a mechanical trader and you have no idea about the condition of the market and how you can develop a plan that you can plug in to the current condition. And the rotations are random. The conditions change. And that's our job, is to attempt to get in alignment. Now, remember, took out this over, there's about a 67-ish%. I have to go look it up. Don't hold me to these things. Maybe a 70% probability that we're going to take, if we take out the first half hour low, we're going to take this out. Where's my location for mean reversion? That's the mean. Fair price, retail. Where was it on sale yesterday? Where's my tuna on sale? 60 cents a can, right there. I have over a 90% probability of taking the first hour's low out and about a 70-ish% probability of taking the first hour's low because I took the first hour's half hour. Where's my outside edge? I'm inside of my value area. If I come outside and now it's still too low, I'm coming here. Is this all making sense? I'm getting a question. How do we know when market is trending when it's mean reversion? Trending is you're going to make, and I'll go into it, you're going to be making sequentially higher auctions and then leaving the high volume, doing another one, leaving the volume. So if we're two-sided, we're going to be like stair-stepping up, stair-stepping down. So in a fractal or multiple time frame, this is down. Now, there's no precision, naturally, part of the thrill. So in this configuration, we have a structured trade that would be qualified called the IB failure, which is a mean reversion trade. And then this statistic opening, you notice this is before I'm showing you the first trade. We have a statistic, 85% probability to get there, who knows, and taking out yesterday's higher low, and I don't know about you, it is a 64%. No, sorry, wrong. Wrong one. I got a lot of stats. 85% probability. Not a recommendation. If I got 80%-ish probability for this, 85% probability for that, what am I going to do? I'm going long. So unless I'm trading rotations, and I can trade long, short, if you guys, not me, doesn't matter what I do, but where's your edge? Isn't it alignment where the probabilities fit? Now, let me show you the first trades. And these are structured trades. Now, you have to determine which one of these you want to deploy. You don't have to trade any of this. You could just be patient and wait for this. And what do you know? This was too low. And we don't know. Now, we don't know what, right? Nobody does. However, let's go further. Let's now think about psychology. If the market opens wherever, and I'm in value, in range, I'm anticipating two-sided trade. So that means an open auction. An open auction is rotational, okay? Now, if you're long from yesterday and we're opening, in range Friday, and in your trade plan, if you're in TraderLab, you would say, what can I anticipate on Friday? Profit taking. If I open, now let me show you the first trades, and these are not recommendations. This is called VPOC migration. This is the open. This is the fair price. Two possibilities. Naturally, we can go up here, developing value area high, and the overnight VPOC. I'm sorry, yesterday's value area high, so out here, and here, and out the top. Or, since we're opening in range and value, we're looking for two-sided trade, and Friday maybe shorts. Anything can happen, doesn't matter. If I get responsive selling, they're responding, then I can get selling here, and then I'm going to be looking for longs to come back in and squeeze out the buy stops that are going to be over the sellers. It's a rotational trade plan. It is not a directional trade plan. Now, you can, since this is the fair price, you could short this to try to come here. But, and you know about this and this. So these all have high probabilities, that and that. But it doesn't have to. This is unfortunately what we live with in randomness. So let's watch. So this sets up right here a potential short. Now, I don't take a short here. Why? Two-sided trade, And any sellers in this leg are going to have their stops over the opening swing high. And you guys have seen me do this a million times if you follow the stream. Also, I get this coming in here. What's that all about? And what else is up there? Overnight mid. Oh, I didn't give you that statistic. What's the overnight mid? 83% probability. So I have this opening swing high. I have an 83% probability of this. I got liquidity. And when it comes to liquidity, it's like stepping on a banana peel because you don't know. Are they in here to skew the book? Or are they in here to trade? What are they doing? Wish I knew. I don't know, so I don't think about it. All I know is the context suggests two-sided trade. I'm not going to sell it. Because the market, for me, I want to get long. So the problem, of course, is where do you get long? Isn't that the truth? This here is your support. That's there because it's settlement, okay? I'm going to replace this with something called a variable high volume node. If you guys follow the stream, you know kind of how I work. This is process. And what the attempt is to translate participant language and behavior. This buy sweep, so you know, sets up the counter rotation. Now, I'm not selling anything because I want to get long. So unless I want to trade both sides, I can do that. It's a two-sided trade. The skew is to the upside. So for me, the better trades are longs, and I already know my locations. I just don't know, should I get long here? What should I do? Anyway, opening swing high, buy stops are going to be there. Break low. This now is resistance. This is support. If I don't get above here, I'm going to rotate down. So subject to your plan. And for me, again, I'm just not interested in the shorts unless I'm going to trade rotate. In other words, unless I'm going to trade mean reversion, which is two sides. But I know that I want to be long because my statistics favored the upside. Okay. So this sets up a potential short. I would not take it because of the stops here. I just want you to know. Doesn't mean you shouldn't. Now, so the lunatic under the hood, who I call Hyde, which is the self-talk and is very judgmental, you should have taken this. Do you ever think that? I kind of have the same emotional responses. I do. I go, you should have taken that. Why? Because it's a potential trade for me in a rotational market. But I know the trend is up and I know my stops are here. So it keeps me from taking the trade short because the trend for me is long. And I can test this. And if this is too low, I can bounce off it and come back. So that's what I'm looking at. And I've got liquidity. Let's watch. I get a sweep here, sell sweep. A sell sweep suggests the possibility of a counter rotation. And I've got 5,500 liquidity in this. So I'm looking at this and I'm thinking, I got to be looking for reversion because what is my idea? I want to come back here and I have this. And I don't know about this, but I do know about the stops here. Sweep into liquidity. Naked VPOC is here. This sets up a potential long. So right here, I see my buyers. I have my sweep, and it suggests a counter rotation. My resistance is going to be VWAP, mid, and the variable high volume node. I also need to clear this outside edge, low volume right here. So let's look. So this is a potential long. Now, the problem with the long is I'm above this, but there's no precision in trading. It's part of the thrill. Outside edge is here. So this is resistance. For me to get through here, I got to get through this to come up and then come across. So I'm only on longs. It doesn't mean it's a good idea. It's just an idea. So that, now, if you took a long here, you come back to the mean. That's mean reversion. The good trade, better trade, I should say, is this. Why? Retail price. If it's too low, I can come back and check, is this too high? This is the auction. So what do I know? Too low, retail, break. Now it's too high, break. This is maybe too low, trigger. This is a Trader Lab trigger, sweep. Now here, I had my sweep and I'm looking here, but look where the liquidity is. And look where the liquidity is up here. Let's remember these things. Sweep, this is a trigger. Let me show it to you. This is order flow and structured trades. Now there's no precision. This is the retail price. Remember that. So right here is the trigger. Now I'm going to show you kind of how this works. Sellers are here. They are below the buyers. Thanks for playing. We're going to send you a coupon to the buffet. Sellers, 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 buyers, sellers. Resistance is here. This little chop, chop, chop. If I don't get above it, whoop, sorry. Resistance. Chop, chop, chop. Break. Sellers are here. Sellers are here. Chop, chop, chop. Buyers, buyers. Where's my resistance? It's here. Break low. Sweep. Sellers. Sweep. Uh-oh. Warning Will Robinson moment. Where were my buyers? Here. They're under the bus. Where's my sellers? Here. Sweep. Reversal. Where's my sellers? Here. Where's my sellers? Above these buyers. Where's my sellers? Right here. Where's my sellers? There. Going down. Where was absorption? Here. And the sweep. Support. I need the sellers to get below here to keep going. What happens? Absorption? Don't know until hindsight. And now I'm above the sellers. Notice coming down. The sellers are above the buyers. I'm sorry. Yeah. So selling. Now the sellers are below the buyers. These guys got thrown under the bus. Now the sellers come above the buyers. Change. So this sets up your trigger. And here's the other way you see it. This is the auction. So what this is too high. That's what's there. Too low. No way to know. Sweep. Retail price. Sorry about that. Let's try it from here. This is where the volume is. This is where the sellers are. Now, I do it this way because I'm showing you the output of order flow. And now you can see it in the auction. So this is your auction. Too high? I'm not paying that. Too low? Yeah, but it's on sale. Retail. This is called a fractal. Now, nobody knows, but when I get this, can you agree maybe there was a change? If my sellers are here and these buyers ran into the sellers and the sellers overwhelmed them, and there's an iceberg, that's your seller, and now I make a new low, the sellers are driving the bus. 262 sell stops come out. Thanks for playing. This is when your broker sends you a coupon to the buffet and a gift basket, and we're going lower. Sweep warns you, liquidity warns you, and resistance is here. I just want to reinforce what you're seeing. The sellers are here. They're still in the game. There's no trigger yet. Break high. Now these sellers are under the bus and the buyers are above your sellers. That's the trigger. Now, what do I know? I'm above the outside edge. My volume is here. Think of it like a VPOC. This is a fractal of that. In other words, this is the highest volume from yesterday's RTH. Right here is the high volume from this microstructure. It's all the same. Now, if I have a trigger, then where might I go? Here, and then squeeze. And again, no clue. This is what's important at the moment. Let's just see what it does. This is your entry. Your stop will go under here, and then you're looking to squeeze. Now, the other part of this is, what do I know? This might be resistance. We might come back here, and I might get sellers at the mid and the VWAP. So if I get long, which is right here, structured trade, I need to be scaling, and because I might run into retail mechanical traders who would sell the mid and the VWAP, and they might be right. Nobody has a monopoly on right or wrong. This is your target. Now, remember, where's the stops above the opening swing high? Opening swing high. Now we got this thing sitting up here. Overnight mid, 80%-ish plus. It's also a viable target. Now, is everybody tracking so far? I'm going to come up. You have questions, by the way, guys? Am I getting a question about the value area? Rick, it's what's the setting for value area? It's 70%. It could be 68%. There's nothing rigid in trading. So I use 70%. Doesn't matter. It just doesn't matter. I don't pay much attention to the value areas unless I open in value, because then value areas can be, kind of like bookends. So in a day like today, I can be trading both sides, right? But if I think the context is up and my probabilities favor this and this, I'm going to be trading towards these areas, this and then this. So my trade for the day is really here, check this, and maybe it never will. We might have an inside day or a neutral day because we're in balance. So that's what I know. I don't know anything else. So we come here, the opening swing high is here, and that's a target. Once I come up, and now this comes into the book. Now, I don't know anything. The only thing I wish I knew, which I learned many years ago, I can't know, is what's going to happen. So right here, I get VPOC migration. This is the highest volume at the time. So the language of the market is, in the fractal, this is too low. In yesterday's RTH, this is too low. And as far as I know, we're going north. This comes in the book, and I know I can do rotations here. And there's yesterday's value area high. Remember the top of the stream. What's the context? Potentially rotation. Do I know when, where, how, if? No. How do I deal with the unknown? Trade processes and a vetted trade plan. So I'm not anticipating a runaway freight train. And that doesn't mean it won't become a runaway freight train. What it means is my plan says rotational trading. If I get the buy stops out here, and now I have, let's look at the logic. Sellers are in here, buy stops are trailing them. Longs are in here, sell stops are under these guys. And if I hit the wall, and we don't know where that is, what might happen? Then these guys become sellers. That's part of understanding market mechanics. So this is too low. This is the new retail price. A couple ways you can trade this. When this shifts up, this is saying this is too low. This is the new retail price. And here's what you can do with this. Now, this is your obstacle. And nobody knows, But this is what we know. Yesterday's value area high. That's important. This. What's this? It didn't pull. Now, when you approach liquidity, that's resting in the book, and this is one of the beauties of using an order flow tool, we don't know what will happen, so let's forget about it. You see a green bubble. That doesn't mean buy. It means it's delta. What is delta? 198 buy stops coming out. Those stops become market order, and delta shows up as aggressors because we don't know if they're initiating, right? Or if it's just shorts being squeezed out. it's shorts being squeezed. Now, if I got through this, it sets up that. If I don't get through this, it sets up rotation. Okay? So, trade management. When you're in mean reversion, rotational trading, it's a separate trade plan, and your trade management needs to be different than if you're in a trending directional market. Now, I don't know anything. So don't think anybody can know. You can't know, I can't know. And of course, if you do know, then you come to Trader Lab, clue the rest of us in. But in the meantime, what we know is context is balanced and rotational. We know this might be too low, and we know in the ETH, this is the retail price. So if too low, then here. So I'm looking for this, but I got to get through this thing. And since I'm rotational, remember the stops are here. So anyway, up here, no clue. Retail. If I come under here, then I got to be looking at the VWAP in the mid, and this is my support. So let's see what happens. Now, trade management wise, you might want to be under here. See the support? And if you come under here, you're out. Or some traders put their stops on the current low of the day and say, I'll catch you later and get in a Barca lounger. But in a rotational trade, after you check this, if you're managing this thing, you'd be out here because this is where the buyers were. Let me show you the structure. I got to show you this just so you understand how this works or could work. Let me show it to you. You're going to see something kind of, what I do is I isolate auctions. So this is a little, so here, chop, chop, chop. Buyers are here. That's sellers absorbed. Buyers and the sellers are here. Okay. Buyers break out, pull back to the volume, which is in the middle. This is high volume, and that's like pulling back to a VPOC. It's the same as pulling back to this. It's the same. So that's for structure. Buyers are here. You see them. Buyers are there. You see them. Resistance, no clue. This is your support. You get below them. It's hasta la vista. Thanks for playing. You get a coupon to the buffet. Now what? Support is here. But what do I know? I got stops and I got this. So if I start looking again for a long, this will be the next location because it was too low. So we got too high, too low, and this is the next location to search for a long. Mid, VWAP to here. It's a mean reversion trade. Let's watch. Sweep. And now you'd be looking for a long here. And what happens? Watch. VPOC migration. So right here is your support. Your resistance is now here. I got to label it, by the way. Now, you're going to find this confusing because as it's developing, it's like a puzzle. So the idea is you know where your trades might show up. Your trade might show up right here for a long. And now here's how this would work. This is your sweep. This sets up the potential for the rotation. I'm below the mid. I'm below my variable high volume node. And I don't have a trigger. I pull back to VWAP. Now right here, I'm going to say, if you use this as your long, your stop would be under here. You would take a stop. And your resistance is really this, but there's no precision. So this to me looks like a long, and it fails. Everybody takes stops. Watch. Resistance is here, and resistance now is up in here. Look what happens here. Watch. What does it say? Let's talk the language. Foreign language, I understand. If I don't use an indicator, what am I doing? I'm reading the language of the market. I'm not predicting it because I can't. So I'm trying to stay in alignment with it. If I take a long here, which is alignment, to come back through here, because I think we're going north, overnight volume point of control. Remember, over an 80% probability. That's why this would be a long and a stop. And if I come outside and this shifts down, now that's too high. New retail price. It failed over here. Then if it comes back, it's potentially a short. And I now have this, and there's more. Or no short. And I have over a 90% probability of getting here. And if I take out the first half hour's low, I can take out the first hour's low. And then this is my outside edge here. I just want you to see all the pieces, 85. So this is where you would target from here because the buyers were here. Where are the stops? Under here. And what does that set up? 90% probability for this and then that. And nobody knows. Watch the behavior. VPOC migration. I'm not paying that. Huh. Really? You don't say. Watch. So this now is my new retail price. So this is auction. This is auction market theory. And all the market is trying to do is check pricing. And if it doesn't like a price, if it's too high at the moment, the job of the market is to find out what's too high, what's too low. And it does it in rotations. So if you look at the end of the day, we'll say, oh, look, there's the high of the day, there's the low. But the rotations are the present. So if this becomes too high, and there's your obstacle, and I leave it, that says, I'm not paying that. Then what was too low previously can become support. Well, if I break below it, and I come back, and the shoppers are saying, well, we're not going to pay that, forget it. And now we're not paying this, forget it. And this was too low, and we come down to it, and I get the migration. This is now too high, forget it. And I break here, and I come down here, which, don't forget, I have over 90% probability. I have a key report at 9 a.m., Michigan, final. Don't forget that. And what happens? Liquidity comes in here. I have my IB 30 at 9 a.m. right here. And I get the report. At this time, it sets up a potential long because, and I don't know, remember, I'm clueless. I have this level. I have this. So if I get a long, I can come back here. I can test here. I can come up. I can do anything. And I know I got resistance up here, the value area high. So let's look at this. So now this, I was talking to a trader this morning about this. This is a report. Now, you might not want to be trading a report, but let's look at some behavior. In the developing time frame, this is too high. I get the report, and this is the IB30. I know that if I take this out, I can then take out the first hour's low. I know I got 85 is an important level, and I know I'm in two-sided trade. I know that's resistance, and this is still in the book. So I got to be conscious of that. Let's watch. See? Now, how do you know about this? You don't. So don't worry about it. What do we know? They come back in. What do I know about this? They overwhelmed the buyers. So if they're coming back in, and you see how it thickens up, this is resistance. Now, I have no way of knowing. So don't think about you can figure that part out. There is no prediction. There's only possibilities. What else do I know? This is the first half hour's low. If I take it out, I have over 90% probability to take that out. So then if I'm in balance, and this is what's really important, if I come out here somewhere, take out the first hour's low and run out of sellers, I can then come back here and come completely across the range to fulfill the stat of over 80% for the ETH volume point of control. So this sets up. Now, if you didn't take a short, now for me, I kind of trade one side. Hopefully it's the right side, but I can get turned upside down like everybody else. Everybody does. There's nothing about that none of us are immune. There's my sweep. This is my buyers. This is my counter rotation. My liquidity, you notice something interesting? Where's the liquidity up top? You notice the reaction. This. Where's my liquidity? Down here. What happens when I get to the liquidity and the IB? Now I have my outside edge, 85, horseshoes and hand grenades, and my value area low is here. I am still inside rotational trade. Remember the top of the stream. Watch. VPOC migration. This sets up the IBF. The IBF is a structured trade. It's in those 60 PDFs that I've shared. When I come across here, it's a long, and you're going for that, and potentially out the top. And we're looking for, where was that liquidity? Right here. Where is it? It's gone. What does that do for me? This. And maybe yesterday's high, because that's the statistical probabilities. Watch the behavior. This is, I got to be aware of this. That's where the sellers are. And this comes in, this comes in. So it might mean, and I don't know, because it's order flow and liquidity, that they're getting more aggressive and they're front running. So I have to be aware of the VHVNs. This has a high probability, and my sellers are there and there. So let's see what happens. Isn't this interesting? So my resistance is there. See the behavior? And where does it come back? This is too low. Buyers are here. Buyers are there. Buyers are there. Outside edge, above the retail price from yesterday, over an 80% probability to go here. This is why I'm only taking longs, and you can trade either side. Doesn't matter because it's balanced. But what's the current trend or condition of the market? Higher. What are the probabilities to get here? You remember. I know, you write this stuff down. And this is, you might be thinking, oh, this is too complicated. 83%, I'm sorry. 83% probability to take this, so it's a target, and 85% probability to take out yesterday's high or low. And I think we have to work real hard to get the yesterday's low. So this, and then that's enough. And then trade management. I think I'm caught up. And I hope this makes some sense. Now, did this drive you crazy? And you're going, I can't do that. Well, it's not easy to do, but let me tell you some of the things. If you have a trade plan and you did all the preparation like I did at the top of the stream, you don't know when, where, or how the market's going to do its thing. It's not up to us. What we know, and it gives us an advantage, is what trades might and where might they happen. That's what we know. And then there's structured trades. The IBF is a structured trade in balance to come back. And this is our probability. Why? Well, we're in value, so that's like the fair price. This is the retail price from yesterday. This is the retail price from the ETH. Think of it this way. If this price is too low And then in the last auction, which is the ETH, the high volume is here. So your can of tuna costs more up here. And if we end up going lower, we might mean revert to there from this low volume node. And you can see where the low is, no precision. And if I get out there, then this is the next area. And then if I get out through here, there's my 85%. And that's as much as I'm concerned about. Then it's put your helmet on. Is everybody tracking? This is Trader Lab. It's an advanced methodology. Yep. Orkra, thanks for posting the pre-market prep checklist and the intraday setup checklist. By the way, guys, if you're looking at this, and I understand when I first started changing what I did many years ago, I thought I landed on Mars because it was so different than what I thought trading was. I thought trading was indicators, and time frames. Why wouldn't you think that? And the fact is they all work at times. Why wouldn't you think they wouldn't work? Why do retail traders use them? Because they get random winners. The point I want to make for you guys is it doesn't take any skill to have a winner. You don't even need a chart in front of you. Just push a button, buy or sell, and you don't even know if it's buy or sell. If it's a random buy or sell generator, you're still going to have winning trades. That doesn't have an edge, but you still get winners. So in the gaming business, which is what this is, like the way casinos operate, they only play games with an edge. It's so simple. Yet we don't understand that. We are looking for confirmation and predictability. Of course, why wouldn't you? But what happens if you're in a business that you're trying to solve for certainty, but certainty doesn't exist? Does that mean maybe you're on a quest and you're going on the wrong path to potential sustainability and understanding the business you're actually trying to be in? That's why Trader Lab exists. Okay. And the tools are available. Now, I'm going to tell you right on, straight oil from the can. This is not plug and play. And this is going to take you time to change your thinking and your habits. Many retail traders are just having fun. They're playing a video game. They're not going to be in the business. Statistics prove that, yet they're always going to have winning trades. Early on, when I worked with George Lane, he created stochastics. I shared an office with him. First time I saw, which is an oscillator. First time I saw stochastics, I figured, we got it made now. Look at that. The line crossed over and the market went up. Ooh, that's all you need. Let me throw that, maybe Fibonacci on there. That's pretty predictive. It always does this. Anyway, that and many years of trying to get things to work and then building trading systems, I always woke up in the same place. Winning trades, but not moving consistently forward, though I can have winning weeks, and the rest of that, right? So wasn't that interesting? It became very interesting to me because I was trying to figure out, well, why is this always happening? What is wrong? Let me fix it. Let me fix it. Well, let me spend a few more years fixing it. Oh, it worked pretty good now. And the reason I did systems, because I thought, optimization, walk forward testing. This is the Trader Lab community. Questions, tools, charts are being posted. Thanks, Willers, for posting that. I'll have to take a look at it. I do a lot of narration during the day. I'm a full-time trader, but you could kind of see. You need to be intentional, have a pre-flight checklist, every time. What are you going to do? Don't know what the market's going to do, so you got to know what you're going to do. And then you got to define change. So if we clear the liquidity at the current high a day, we can get to the overnight VPOC. Where's that liquidity? Well, I don't know. It's at that high a day. And where are we trying to go? So when is this posted? 10 a.m. Central Time. Well, it's now 11:30. That's over an hour ago. Where am I trying to go? There. This is what trade plan is about. If we clear the liquidity, which was wherever it was, forget where it was, 8:30. Well, anyway, over here, I think it was here. Then there. Can you see the logic in this? Now, I lost Trader Lab. I want to show you just a little bit more of that. Now, in Trader Lab also, besides everybody posting and helping each other, it takes a community, data mining, research, developing structured trades, but there's a lot of statistics involved in this. And it takes a big effort to develop an edge. And we all, and there's not one way to trade. What it really is what works for you and what aligns psychologically. Next target. So that's a scale, or you're done with the trade and you're done. And would you fade this? It's a question. Me, not so much. Why? 85% probability to take out yesterday's high. And of course, we don't have to. So trailing stops. There's also a library of webinars that you guys can check out. Thanks, Ned, for curating this and doing all this extra work. Guys, if you're in Trader Lab, you got to give Ned a thumb up. If it wasn't for him, there'd be chaos. Start with the primer webinar. It's got about 32,000 views. It gives you it's about an hour, a high-level overview. I'm not a vendor. There's no cost for this. Trader Lab is absolutely no cost. Then meet the Trader Lab. This is advanced trader education. This is not romper room. And it doesn't matter how long you've been trading. In fact, the longer you've been trading, the more you believe you're doing the right thing when it might actually not be. That was my problem. I thought it was persistence. I didn't understand that I was looking for more certainty, which is why I built systems so I could optimize them. That's creating certainty, right? So I would have outputs of statistics, but I was optimizing on data that was maybe 4 weeks old, and then I'd have to do walk forward testing on a chunk. If you've ever done system building and design, that's kind of how you do it. But if I'm a month behind with my data sample, how does that relate to today? What I'm looking for in systems and what retail traders look for in curve fitting is the same thing. Probabilities based on past. And you would think that would work. But the thing that is missing in that is something called context. That's what I did at the top of the stream. All the work is done outside of trading hours, and the context suggests to me the possibilities. Now, if the context changes, I change. And I won't know that until hindsight. But Meet the Trader Lab is important. And this is a day of trading. By a day of trading, the plan, which is what I'm showing you today, the specific structured trades, and then taking the trades. And there's also in this library of webinars, and there's a lot of documents. There's all kinds of documentations, and it's not just what I have contributed; it's what the community contributes. How about mental obstacles? There's an audio on that I did, and then the best videos from different years. And there are live narrations that I did up to 5 hours long, if you can handle it. So if you want to see me doing this live, it's all there. Remember, next target, right? Are you guys getting something out of this? And where's our next target? Maybe not important. This, 85%. And it never has to get there. We're over the value area high. So this is important. Are you guys with me? And you notice the levels are pre-marked on the charts, you see? Level, stops are going to be above yesterday's high, 85% probability. I'm ready for your questions now, if you have any. Thanks for your patience. Thanks for visiting Trader Lab. Please give a like if you're in YouTube. Van, all the information is in the Trader Lab. Everything is pinned to the top of the Trader Lab. So the documents, the webinars, it's all there. Plus the contributions that other traders in the Trader Lab have made over the years. It's a community. There's too much work for any individual. We do data mining. Thanks, Rod, for doing the deep the deep dive into statistics, and there's just a lot going on in here. But the thing about trading, we think trading is complicated. Let's change how we view this. How about it's random? It is not complicated. It is formulaic. What is complicated is dealing with random rotations, being emotionally triggered, fight and flight. That's problematic for us, and not being patient. It doesn't matter if you miss a trade. The only reason you would miss a trade is because it's not your vetted trade. If you don't take a trade because of fear, then you don't have a statistical edge for the trade. Then you don't have a trade. Building the business is what Trader Lab's about. It's about you learning to understand what you're trying to do and what you need to do to participate in this environment. It's a counterintuitive environment. We're wired to avoid risk. I think that's not bad. Don't step in front of the bus. It might not work out for you. So you don't do it. Hopefully. But what do we have to do here? We have to step in front of the bus and take risk. Counterintuitive, and everything in your wiring is telling you, wait, don't do it. Fear, doubt. How can you not have fear and doubt in a 100% random environment? You will have it. So what you need to be thinking about is you need to understand your wiring. That's the first part. You need to learn about yourself. You need to document your behavior. You need to see repetitive issues when your fear overtakes your intention and you don't click the mouse, even though it comes to a location, even though you know that there's an IBF structured trade right here, and you're looking for that, and you don't take the trade. And then the question becomes, why not? Fear. Or you haven't done the work to know you have a statistical edge. How do we control fear? Have you ever thought about it? It's not willpower. Believe me, I tried it. I even tried behavior modification. I had a thick rubber band, the kind that if you get the mail delivered in the States, they wrap everything in a rubber band that's the size of Florida. And I put it on my wrist and I would snap my wrist to try to, I thought, yeah, it works on dogs. Why not me? Well, didn't work. Got a sore wrist. And then I was thinking of upgrading to a cattle prod. I actually was joking about it. Now, seriously, no cattle prod. But I thought maybe I need a bigger, get my behavior modified. I need a maybe 2x4 or a cattle prod. So I didn't go that route. Instead, I figured out, how do I get control of emotional states? If you don't have a statistic, something tangible that you can touch, like if I take the IBF, what is my probability of getting risk neutral before taking a stop in this condition? If I know the answer to that, and let's just say I'm making a number up now, it's 62% probability of getting risk neutral versus taking a stop. Now, instead of emotions, which will dominate what I do, because there's nothing else, I have a tangible number. I open up my trade plan in a balanced market. I come outside, I get my statistic, and I'm in balance. My structured trade is along, and if I have a 62% probability of getting risk neutral, so the worst that happens is I scratch if the thing makes a new low, which it can, that gives me control over my emotions because I have a tangible proof, not emotional fear, dominating what I do. The tangibility of a statistic, the tangibility of over 80% to get here, the tangibility of the IBF structured trade in this context allows me to put the trade on in spite of my fear. If I don't have the statistic, I only have my fear. And if I only have my fear, the fear is going to control what I do. if I have the statistic, I can thank my fear for trying to protect me, and I can say, no, not this time, because I have a 60x% probability of getting risk neutral, and I can afford every day to take that trade because I have an edge. Does that make sense? Did Discord fall out, guys? Am I gone in Discord? Huh. I don't know how it does that. Let me see if I can get Discord back. Sorry, guys. I have no idea why it does this kind of stuff. Give me a minute. Okay, it should be coming back now. Just confirm that you've got it back, okay? So it should be back. Sorry about that. How we doing in YouTube, guys? Please give a like if you like it. If you're interested in Trader Lab, use the link in the bottom of YouTube. Is there audio in Discord? Sorry, guys. Anyway, this is our target. So here's the thing about Trader Lab. There is no holy grail. Nobody can hand you plug and play. If anybody could, we'd all go there. I'd sign up. I'd be sitting there with you because I want certainty. I'm wired for it, but I'm in a business where I can't get it. So I'm not going to try to get it where it doesn't exist. So I'm going to try to solve for uncertainty, and that means statistics and understanding market mechanics. You can learn this in the Trader Lab. I believe, and I've done it for years, I can train anybody how to trade and how to build out the business. I can't do it for them, and it has to be adjusted to the individual psychology. There are some traders in Trader Lab who are going to buy this thing and they're not going to touch it. They're going for these statistics and yesterday's high, and they're just going to hang out. There's other traders in Trader Lab. They're going to be trading these shorter rotations, you see. I tend, and it's only because I don't like to be overly active, because then every time I put risk on, I also risk taking a stop. When I get on something that I perceive has statistical probabilities, in other words, I'm willing to take stops, of course, to try to get on this or the long from down here and just hang out. And then when this happens, my lunch almost gets on the keyboard because I'm emotionally connected. I have choices. When I get this and it comes down under my support level, I can be out and I can just put it back on. That's a lot of work. So the more trades I take, the more risk I take. I tend to try to take a minimum amount of trades based on locations, but I'm trading conditions and statistics. This is why statistics. And once I get positioned, unless things completely fall apart, now I'm always scaling to cover my risk. So even if I get long here, I know that I have to scale. Now here, see the selling? That's the VWAP, mechanical sellers. The context is up. If you just automatically sell the VWAP, well, you might get a scale, but for me, I already know I want to be long because of my plan. This might be a great trade for somebody. I don't know. It's not for me. This is my trade. This is what puts bread on the proverbial table. I'm looking for 20, 30, 40-point trades. I can get them if I know that I have over an 80% probability of this and this. All I got to try to do, and I'm not saying it's easy. I'm not saying I don't take stops. Everybody does, so Got to get used to that. By the way, what's a stop? Overhead and cost of production. It's professional traders, and this is not easy. I'm going to tell you, professional traders are detached from the outcome. It's like a curiosity because they know what they're going to do. It's kind of like, well, all right, I bought this ticket to ride. Am I going to get a flat tire and I'm going to, this is not going to work? Or I'm curious, is this going to work? Because I know it has a probability. I don't know if it's going to work. Oh, it didn't work? That's interesting. Where's my next location? Or has the condition changed? Well, no. All right, then if I'm wrong, which of course, if I buy it here, where's my resistance? It's out here in the high volume here, microstructure. That's resistance. If I don't get through this, I come back to support, and I have support here. If I find support, where's my resistance? It's up here. If I get through there and I get VPOC migration, I get this. If I can't get through this and this moves up and I come under here, I get that. But you see, now you individually might say, oh my goodness, I can't handle this mentally. Look, it moved against me 5 points. And if it went down here, I'd throw myself out a window, which sometimes, because it can do it. So how do you operate in this environment? Statistics, trade plan, education, and not doing what other retail traders do. Because they do not have sustainability. They do have winning trades. And how does a dealer in the casino operate? They just play the games that have an edge. So if you think of this as gaming and not predictability and certainty, there's no certainty what happens when a dealer deals a game. Cards are random coming out and gamblers play them randomly. There's no control. What does the dealer have to do? Just deal the cards and play the game and pay the gamblers when they win. And also the gamblers play the house when the house wins. But because the house has an edge and they execute the game exactly the same way, no variables, no FOMO, no skipping the trade out of fear, no nothing. They just deal the next hand, no matter what happens. We have a real problem with that. Buy sweep, counter rotation. So that's the business. Now, can you do the business? It's going to take more than you imagine to manage yourself. Anytime a trader asks me, what's the hardest thing learning the trade? It must be very complicated. I'm going to say, no, it's not complicated. It's just random. That's what's hard. If you build out a trade plan, and most retail traders have FOMO. They want all the setups and structured trades. They want to play a video game, and they think this is, like sitting at a one-armed bandit. That's just, you're just passing through. You're not going to be in the business. And if you're not willing to do the work, don't even do it. Go do something else, because you're going to have a real hard time. As you develop, you're also going to have a hard time. But what is the path? Well, I always suggest to developing traders, and most developing traders aren't going to listen to me because they don't believe it. So they're going to find out, maybe waste a lot of time or take themselves out of the business, because all the errors that we all make, I've made them. And I had my own beliefs, and I thought my beliefs were correct. Why wouldn't you think that? I believed that I could trade many setups, and I didn't understand that setups are conditional. They're not generic. In other words, certain trades fit in certain conditions, other ones you wouldn't touch. But as retail traders, we always do the same thing because we're mechanical. We don't understand context. In the Trader Lab, you would learn why this is rotational trading and how to navigate it. Retail traders are just selling the mid, selling the VWAP, doing this or whatever they're doing. I don't know what they do, except they don't last in the business. The way, in my opinion, to develop a sustainable business process, and that doesn't mean you will, is to do the work and isolate one condition. That happens most of the time. And then you reverse engineer it using the tools in the Trader Lab and other additional order flow education, whatever you need. You use a high tier tool like Bookmap. It gives you tremendous insight and edge. but it doesn't solve the problem of randomness. So how do you solve randomness? Because you know where your trades will show up. And then you have to have a structure or a trigger that you've vetted. And then you need to know that the trade has a statistical edge. And you also need to accept that the outcome is random, same as the casinos do. And you grade yourself on your performance, not on P&L. If you have an edge, just like the casinos, your performance, the dealer's performance, is to just deal the next hand and play it correctly. As traders, our job is to take the next trade that's vetted in alignment and do it correctly. And we're going to take stops just like the casinos pay the gamblers. It's the same thing, overhead and cost of production. Not an approval business that you're so smart. That's not the business you're in. Though, we're looking for that approval. That's our psychological need. In fact, we have traders in Trader Lab, and JJ Marks, I believe, and correct me if I'm wrong, JJ, is a, let's just say, I believe you're a psychologist, psychiatrist, or a rocket scientist, one of those. And we have that kind of skill. Now, of course, psychologically, none of these, this is not therapy, it's not advice. None of this is advice. This is based on my almost 46 years of experience doing the same things you've done. I wish I could get 10 or 15 years of that back where I kept doing what you guys do. When I started, technical indicators were new. It was a new idea. When I started in the business, there were no computers, no personal computers, no internet. You wanted to learn trading, you bought a book or you paid a ridiculous amount of money for a seminar. You guys now have chat rooms all over the planet and experts everywhere. I'm sure you've probably done some of that, and all I can say is you're going to keep doing that. Now, if it works, keep doing it. And remember, everybody has winning trades. Everything works. This is our catch-22. But what do we know in the Trader Lab? Over 90% of retail traders fail, and they can't sustain themselves in spite of having winning trades. Can we figure out why that happens? Well, I did for me. And it took me too long because nobody was talking about market mechanics. They were talking about indicators. So I thought, based on my research, that I just had to get the right indicators and all. You know what I'm talking about. I talk about this. That didn't work for me. It was Trader Groundhog Day. Waking up in the same place after working hard and going, well, maybe I just got to make it better. Maybe if I mix this time frame and that and this indicator and put a little Fibonacci in there, let's throw some Elliott wave and sprinkle a pitchfork in there. Somebody brought up a pitchfork a week or so ago. You guys know what pitchforks are? I remember putting a pitchfork on my chart. I mean, I had forgot. I've done so much stuff, I don't remember it. And I think that's part of it, is to shield myself from the weeping and gnashing of teeth. You know what that phrase is about. What do we have here? Outside edge. What did we do here? Too low. What's this? Outside. What's this? Retail. What's this? Retail from the ETH. What's this? Liquidity. Obstacle. Where am I trying to go? Here. And if it doesn't get there and I get taken out on a trailing stop subject to my plan, it doesn't matter. Does it? If I'm long from near the low of the day, is this going to put bread on the table? How many of these do I need? I don't need a lot of them. Is this something that interests you? If so, visit the Trader Lab. Use the link in the bottom of YouTube, and also please give a like. Now, I got to remind you of a couple little things. There's a new course that was just created. It's supply and demand setups. It's available to all of you in the Bookmap server. Also, you can use the link in the bottom of YouTube to access Bookmap, all the education. There's no cost, this kind of stuff, and loads more. There's contests to win free subscriptions to Bookmap. All this is possible. Now, to get access to the Bookmap server, the Trader Lab, and all the other resources that are available, you must verify to get access. Now, what does that mean? If you haven't verified yet, it means if to access the Discord, Bookmap Discord server, you need to use your email that's associated with your Bookmap license key if you haven't verified. If you verified, nothing to do. If you use TOS Bookmap, you need to register and there's no cost. Just click that. You're not going to get, nobody's going to harass you. Nobody's going to sneak in, while you're sleeping. None of that. It's to keep the spam and the riffraff out. You can also use the QR code. And if you're not a Bookmap user, that's okay. It's all free. You need to register just to keep the riffraff out. And so we don't want spam and, we all get that. You all guys all know about that. So that's going on. And again, you can access a lot of education. This is brand new. I haven't gone through it yet, and I'm going to watch it. Also, I suggest you guys come to Trader Lab. There's a library of webinars that I show you, the Trader Lab community. All that's available to you at no cost. Final questions. I got about 5 minutes. Let's see what the market's doing. 85% probability. Is this the kind of methodology that could help you? Could this help you on your journey to building a sustainable business? You are going to have losing days. We all take stops. We all hit our loss limits. There's a tweet or something. We're all thrown under the bus collectively. That's trading. But if we learn how to trade and we know where the trades might show up, IBF, then you are anticipating it, but you can't predict it. Does that make sense, guys? Please give a like in YouTube. Use the link in the bottom of YouTube, guys, if you're interested in this. James is asking me, do I have a video going through pre-market analysis? I think today is pretty good, but I got loads of them in there. If you come to the Trader Lab community, JJ, aren't you a retired psychotherapist? Oh, you were at the CBOE in the OEX pit. Now we know. Yeah, thanks, JJ. Thanks for all your contributions to Trader Lab. Guys, Trader Lab is a community of like-minded traders. We have to work together. There's too much to do. Data mining, research, support. You need an accountability partner. You need to understand how to journal. You need to learn how to discover your psychology, our humanity, and the problems it brings to us. Icebergs are selling up here. They are front running, right? Now, we're above yesterday's value area high. Part of the trade plan says what happens if we get above the value area high. We want to trade in the market is rejecting former interpretations of value. We are trading in the direction now of this if we weren't long. Of course, we're long from near to low of the day. Can you do that? Do you understand why? If you don't know why, you might want to think about visiting the Trader Lab. And it's not that you're not, this doesn't mean you'll be a successful trader. But I think if you're waking up a trader Groundhog Day, and I did a webinar on it because it's about me, I've done everything you've done, but I only got to do it much longer because I had no information. I mean, there was nothing. Totally nothing. All my friends were floor traders, and, there was nothing. So it took me much longer, and I kept repeating Trader Groundhog Day. You don't have to do that. That's what the Trader Lab is for. Be sure to get verified, guys. Do not miss this. You need to do it today or this weekend because you will not have access to the Bookmap ecosystem and the Trader Lab and all the other specialty streams, guests, contests, for free Bookmap subscriptions, all this kind of stuff. There's no cost. It's free. If you're a TOS user, you need to register free. And if you're just visiting and you want to visit and become part of Trader Lab community, that's free also. But we need you to register to keep the riffraff out. Thanks for visiting Trader Lab, guys. Copy this link. Visit the Bookmap Trader Lab community. Watch the library of webinars. Start with the ones I always recommend. The primer webinar, meet the Trader Lab. It's advanced trader methodology, and be sure to confirm so you have access to all these resources. Please give a like on the way out. Thanks for visiting Trader Lab, and I look forward to seeing you guys on Monday.